Boom, we are alive, ladies and gentlemen. Happy New Year, Merry Christmas, all those things I missed while I was taking some personal time off. The markets have been volatile the last week. If you were in the private bear group, we shared some of our distributional charts, which I think came right on time for this educational process. But first, what I wanted to do was actually flip over to this screen because I saw this yesterday and I thought about kind of going over one of these ideas. I thought it was I don't know how Jim Kramer does this all the time. He must be getting paid by someone, but nonetheless, I wanted to share this quickly. Mr. Jim Kramer, ladies and gentlemen.
Are going to use that as a chance to sell. But this thing is, you can't kill it. And
I love that. I love that his side guy there. His side guy was like, "Wait a second, who can't kill it?"
On so many things, was blind to this. Now you can say, "Wait a second, maybe it's all going to come
Jamie
unravel."
Dimon has not spared any negative words.
No, but look, I mean, it's a reality and it's a technological marvel, and I think people have to start recognizing.
It's just Jim Kramer is always he just
He's been against it almost all the time.
he gets all of these almost. The inverse Kramer is seriously a godsend for anyone who's in the market. It's almost as if you need to be following Jim Kramer just so you know to pay attention, because he must be getting paid somewhere to be like, hey, we're basically at the top of the market. Things look distributionary. We went over this in the private group yesterday, but let's go over it also today. So here we are back on the Arcane Bear website. We had accumulations, reaccumulation ranges, and then around the 23rd of December, I shared these in the private group. I can't click to open them, but luckily I still have them open over here. These are the distribution schematics. One of the difficult parts here is when you're charting reaccumulation and accumulation schematics, reaccumulation can look like distribution. And it's actually one of the mistakes I made with Avalanche, so I'll go over that. But when you get a reaccumulation right, they're very powerful. So there are phases, phase C specifically, where the risk to reward relationship gets totally skewed. So if you're entering a trade at the top of phase C, it's basically a very bad idea, even if it ends up being schematic number 3. So I talked about this in the private group because schematic number 3 does something where it starts to close above the box. So before we go into Avalanche, let's just pair these side by side. Notice how when you get to the top of the box in phase C, how similar schematic distribution 1 and reaccumulation schematic 3 can be, to the point where in our private group, I was talking about this, and you guys will get an email update within the next 24 hours here. But effectively, the difference between schematic 3 here and distribution schematic 1 are small, subtle differences in the volume and supply signature, because phase C starts to close above the box. And phase B also has this very strong reaccumulation that's above the trading range, very similar to what we saw here. I will basically never trade a schematic 3 again. If I start to see closes above the box where we don't get a proper spring or a test in phase C, it's really not worth the risk to reward relationship. Even though schematic 3s are the most powerful reaccumulations, I've learned now that it's just not worth it. It's not worth the risk to reward relationship for an above the box jump of the creek, because it very easily ends up being exactly the opposite, which is a distributional schematic. So I just wanted to start there, but let's take a look at the fingerprints of each of these and what that means within the trading range. So before we look at Bitcoin, well, we could look at Bitcoin too. Actually, let's start with Bitcoin because everyone loves Bitcoin, but I'm going to start on a very small time frame here. So because we're looking at the distribution schematics in the private group yesterday, we were kind of pontificating. There's a few of us who were looking at this trading range. I'm going to highlight it with my area chart here instead, so it looks a little bit simpler. But again, what I wanted to point out is this break above the box. This break above the trading range here was very, very deceiving. And now this is a small time frame, so the schematics are not as easily defined. They're not as easily identifiable because they're happening so quickly. You can have some variation to them that are not as powerful effectively. But This moment here where we went above the trading range and then came back into the box with a large amount of supply, this was indicative of this distribution schematic where we came up above the box and then came right back down into the center. So we came right back down into the center and we couldn't close back above this trading range and subsequently fell significantly out of this range. Now, Bitcoin itself is actually, here, let's go back to this chart. We'll go back to the 1 hour. You can make some pretty easy arguments here that this is the trading range that Bitcoin was in. So you'll notice in kind of turquoise at the top of the range here, this is normally where the SOS phase takes place. But again, what I want to point out is the potential for the dramatic shift in character. Now, one of two things is going to happen here. And I'll share sort of the conjecture around Avalanche to this as well. A lot of what's happening here is people start taking out leveraged positions in the market because they feel confident. And big players who want to drive the price up don't really like that because it means they don't have a handle on the supply and it's very easy for them to wipe them out and get these big market fluctuations and volatility where they're effectively not, it doesn't affect their position. So for instance, I have spot positions in Avalanche and I had a leverage position in Avalanche. The leverage position got closed out, whereas the spot positions I just leave because it has a longer time horizon on the maturity of the trading range that we're following. So just for some kind of specifics of these schematics, we're on the 1 hour chart for Bitcoin here, which is not a huge, it's not a big frame. It doesn't give us a ton of data. It's not until we start to zoom out that we get more data. But because we have these new distribution schematics to pay attention to, when you get to the top of the range and fall back into the range, if you can no longer close above the top of the range, you have to look for further downside. So what would further downside for Bitcoin look like? We had talked about this potential area. Now the first kind of sign of strength we thought would move us upwards of around 47, and we got really close. 45 is not that far off. I mean, if I had, instead of drawing a single depth line, if I had done something like this, hey, there's a significant amount of resistance in this area, it might have been easier to calculate. Again, I think often what we'll do is we'll get too caught up in, this exact price target, instead of this is a range that we're looking for. There's a serious amount of resistance within this range, so we want to keep our eye on that. Now, I had also pointed out something for Bitcoin that I thought was really important, which is this what's called a Livermore widening megaphone pattern. So I'm going to not draw it perfectly here, but we'll get pretty close. So we got pretty close to the top of that. And we've seen in the past, it doesn't always fit the move exactly. It just needs to get close. So there's a potential for a downside target of around 34,000. But effectively what I think we're going to see here in the next month is not just one big downside target, but a reaccumulation range. So it's highly likely in my ideal right now that Bitcoin starts to do something like this, and we see a more volatile range that eventually goes to the upside. But for the next 6 months to a year, basically, upwards of it, probably till May, I think in May we'll really start to see Bitcoin go for a Hail Mary fire as people start to realize that there's very little value left in the dollar. But I've talked about this before, that in these reaccumulation schematics, in the widening megaphone pattern, so it's two very distinct, very powerful patterns that are taking place here. This is what we usually end up seeing, is a reaccumulation that goes through the center of this trading range. Now, I've gone back in the past and looked at this for Bitcoin before, but because I think it's always helpful to do exactly that, here we are all the way back in 2020. And I want to share what this looked like prior as well. So number one, actually, let's do this first. Before we look at the widening megaphone pattern, what I want to do is focus in on the schematics here. So first off, in the middle of the range for Bitcoin, a beautiful reaccumulation range that took place here. A break into a new reaccumulation range, but look what happened. It fell below the box and then formed what's another reaccumulation range. These are usually what we call schematic twos. Let's go all the way back here, where you have a jump to the top of the box and then a reaccumulation down at the bottom. So something similar. Too many screens open. Sorry, ladies and gentlemen. Let's go back. Yeah, I'll just flip between these two. So a distribution that effectively looks like a distribution schematic at the top of the range here, if you look very closely, this is, you got your up thrust, distribution, break below the box, but these can turn into very quickly just another reaccumulation channel. So for Bitcoin, again, the other important part here that I wanted to quickly go over was this widening megaphone pattern. So we have talked about these before. They usually start off the back of the spring. They look something like this. I think I think I had it drawn up. Was it on this one? Yeah, it's on this one. I already have it drawn up, I'm pretty sure. So instead of redrawing it, we can just go back here. Oh no, this is the wrong screen. Okay. I'll just redraw it now for fun. So these are the, where was it coming? I forget where we had drawn it from previously. I wish I had just left it open. Something like this. This is kind of the rough hand sketch. I apologize. Maybe it'll be easier if I go like this. The point of this being, we've seen these kind of widening megaphone patterns. Where was it drawn from? I wish I'd just left my old chart open. Let's see here. Sorry, ladies and gentlemen. I should have had this already opened up here. There's that. There we go. So this is the widening megaphone pattern we were looking at previously. Okay, already drawn up, points already labeled, and perfect. And there's this is effectively where I thought we would see the reaccumulation come into play. So we're right in the middle of that now. So I suspect that what we're going to see is somewhere of a jump between 49 and a retracement back down to 36. And we're going to see a reaccumulation schematic that takes place right in the middle of this widening liver megaphone pattern. And then also back here, look how this happened during the 2020 market cycle up. You had your point 1, 2, 3, 4, 5, 6, 7, and then breakout effectively. But notice that the very last part of the range was a reaccumulation schematic right before it broke up into higher highs. I suspect that the exact same thing is going to take place over the next 3 to 6 months, that you're going to see volatility in all of the assets. We're going to find out who the true leaders are going to be in this next little bit. But effectively what's going to take place is you're going to see a lot of volatility sweep in the market between $50,000 and $36,000, probably for the next 3 months. So there will be a lot of great positions to play with, but it will also be volatile. This will be probably one of the most volatile parts of the market. And this is where a lot of YouTube channels are going to flip-flop. They're going to go, oh my God, Bitcoin's going higher. Oh my God, it's going lower. Oh my God, it's going higher. When really what's just taking place is a sweep of liquidity to try to build these reaccumulation schematics. We are about to hit some really intense parts. I suspect the market is going to do a bunch of printing. They're going to probably drop interest rates. So seeing as we're kind of already on that discussion, before I take a look at Avalanche and a few of the other assets, let's take a quick look at the dollar. The other thing that took place within that 24-hour period was there was a strong bounce and capitulation off of the previous support area we were looking for the dollar as well. Now, if you notice though, this actually looks like a distribution schematic. Here, this jump into the top of the range and then close down below, it's highly probable now that what you're going to see is the dollar do this and then break down even lower. So now that we have it's funny because I made these distribution schematics literally a week before, and I was thinking to myself, I'm like, I hope this isn't like the bad omen of right before the market drops. And it was. Sometimes your intuition is better than charting. Sometimes the universe will try to give you signs and symbols. It's, you could perceive it as all just nonsense, but intuition can be extraordinarily powerful in its right seat. You should use it with other things, but anyways, the point of this is these distribution schematics can look and appear almost identical to reaccumulation schematics. This is why getting a reaccumulation schematic, something similar to what we saw with Avalanche, where you have a nice schematic too, where you're entering the position at the bottom of the trading range and your risk to reward relationship is significantly higher than whereas our study there with Avalanche, thinking it was schematic 3 here, the risk to reward, your stop loss should basically be at the top of the box. If you're in a leverage position, again, my spot positions are just staying as they are. But if you entered a leverage position, let's say in phase B, you've got to break out into this phase C, the stop loss should effectively be right at the top of the box. Because if you come back into the box, it's going to become distribution effectively at this point. So that was a very, very good lesson. Again, the email update for Avalanche and kind of the few kind of key and pivotal moments of the supply signature that changed my mind about everything, it will come into play there. But let's look again back at the dollar. So there, I suspect here what we're going to see for the dollar is a breakdown. This looks to me like a distribution schematic. We've gone up into the top of the range, come all the way back down to phase C, and we've got our first, basically our first check of this trading range taking place right here. So I suspect the dollar is going to go up, down, and then break below. So I'll just leave that drawn there. Let's go out and look further on the daily, because there is another area of support here that will start to show up. So I want to make sure we don't miss that. And I'm going to have to look at the weekly because the dollar here is on its own. Again, interestingly enough here, you could be looking at what is also like not just distribution on the smaller time frame, but on the bigger time frame as well. So we have to keep remembering to zoom out while we're doing our trading, specifically because this trading range here is looking like distribution as it starts to come back into the box. And now there is one final kind of moment of actually we're going to have to zoom out to the monthly. I keep forgetting how big the dollar is here. Boom. Okay, so here we are on the monthly. We had basically hit the top of this channel on the rising part as well. So we had an accumulation box, a breakup, recheck, a breakup, and then what appears to be distribution on the top of this range. So the dollar could have a long ways to come down here. So in my thought and process here, we're going to come back probably to the top of this trading range at the very least, which is around 90 points for the dollar. So right now, because what we're witnessing is a very distinct difference in the way the Fed had addressed the markets previously, where they're effectively saying they were going to continue to raise rates regardless. Here we see they've pivoted into the understanding that, things are looking good in the market, the jobs numbers are better, and the stock market is up. The chances are now that they're going to turn into printing money, and a bunch of it. They're probably going to do things like raise the lower the minimum wage, which just causes even further inflation. But people will feel happy temporarily going into the elections. And I think that the United States is a banana republic. You know, I'm not a U.S. citizen. I don't live in the U.S. From the outside, to me, it looks like y'all live in a banana republic. So the sooner you realize that, the easier it is to think, so what would a banana republic do? They're going to print money going into the election so people feel happier. They're stimulated by that monetary expense, and they can get away with more of their crimes more easily because people are high on money and drugs, effectively. Anyways, so just a quick look at the dollar. I also want to take a quick look at the S&P 500 for this. We'll go back into Bitcoin and some of the other aspects of the market. Okay, so just for fun here, look at this reaccumulation schematic that took place for the S&P 500 all the way back into 2008. We're in a bull market upcycle. We've had a first kind of distributional schematic, but more importantly, let's look at this time frame. So ultimately, we were bullish even when Michael Burry was going short. We're like, that's the wrong choice. They're just going to print money, and we were right. Sometimes you can do better than the bigger players because you just have less. You have less reputation on the risk, or less reputational risk, I guess, too. Could be one of the ideas, but. Effectively, I think we're going to continue higher in the stock market, but not before we have another little swipe of liquidity here. So if we go up and we start to look at these smaller time frames, they become very valuable for a few reasons. Number one is this looks like a distributional schematic as well. So if we start to play this game on multiple assets, what we can see here is that there is a small distribution taking, I would say probably we've got about a month of volatility and capitulation in all of these assets. But currently, this looks like a small distributional schematic. So on the larger time frame, I suspect what we're going to do is come back down and retest this 47.51 area, where again you have a nice chunk of supply moving through about here. I think you'll come all the way back down to here. This is going to create volatility in the Bitcoin market. It's going to create volatility in all of our assets effectively. So this next 2 to 3 weeks is just patience, because the market's going to do a lot of things to wipe out a lot of people in those leverage positions. So it's better to just wait. There are opportunities to take out very quick positions. It's just not my style. The leveraged Avalanche position I had got closed out in profit as soon as we broke the range. Now, let's take a look at Avalanche, because it was a beautiful lesson. So for those of you that are in the private group, this is where I made the mistake. So I was looking originally thinking Avalanche was in a reaccumulation schematic 3, something like this. This was a very valuable learning lesson for a few reasons. Number one, just to start, I closed out my position here because I have a new mantra now, which is if I'm confused, I should exit the market. If I'm if it's a spot position, I've usually been working on building that position for a while. The entries are all significantly lower than here. I'm willing to wait out the long-term story, which I believe is still bullish. But in the short term, I closed out of my position here. So now, mind you, we were already significantly up from that leveraged Avalanche position of around 103% at 3x, which was amazing. But this is where I got this wrong. I suspected that what we were seeing, because I was kind of in a euphoric mode, was, oh, this is a reaccumulation schematic 3. Avalanche is going to be more bullish here. We've got this break above the box. We've got these other tests. Avalanche had looked really bullish. So in this moment, I thought we were in schematic 3. But if you look closely, there's a few things that could tell us that had changed. Number one, let's look at the top of this range and let's get rid of these current markers for now. I'll draw this up a few times just so we can share kind of ideals. But look at the top of the range here. Let's draw this as its own kind of trading range itself. This looks exactly like distribution. It's like this is actually what's traditionally called a rounded top. I should change the color of my drawing pen here so you can see it a bit more easily. Yeah, this is what's known more traditionally as a rounded top. This is a distributional schematic almost every time. And if you look near the bottom here, as soon as we couldn't get back into the trading range, that was game over for this trading range. Now, the thing that I was confused about here, again, was thinking that reaccumulation schematic 3 wasn't distribution schematic 1. But again, so one thing I learned, number one, reaccumulation schematic 3 is never worth the risk to reward. If we think it's that bullish, you should always have a stop loss basically right below your trading range here, because there's no sense in the risk to reward relationship as soon as it drops back into the range. And that's exactly what we saw here with Avalanche. Going back out to the 4 hour, as soon as we entered back into what I thought this range of schematic 3 might have been, the downside became more apparent. So here, again, as soon as we re-entered back into this top portion of the trading range. So for those of you that don't know much about this, you're going to have to probably do a lot of catching up on studies. A lot of the terms I'm saying won't make sense to you, but here, let's again, look at how beautiful this distribution schematic turned out to be. We couldn't get back above the top here, and we fell right back in. We saw a quick test to the top of the range here, pretty close to a quick test to the top of the range, and now a breakdown below. So this is going to be really interesting, because there's actually a third opportunity that could take place. Now, we nailed the last reaccumulation range because it was just blatantly obvious. This is not as obvious, because what you could see here, and this is going to show you the nature of scale and variance. What we could be looking at here is actually just a larger trading range, where this is now your primary support, and this becomes your buying climax. Now, the reason why I don't think this is the case is because the supply signature just doesn't fit that. On the smaller time frames, the supply signature is usually what we use to lead this, which means that this primary support here, this signature here, this is where things should have started to become more obvious for the distributional cycle, is that buying started to decrease as well. So a lot of the buying signature decreased here. It was on constant decrease. So there are a few things now that we need to keep into our kind of toolbook, because or tool shed, I guess, because right now the risk to reward for going long on Avalanche doesn't make any sense. But what we could see, and again, this is where these can become confusing, is that these later ranges become more volatile, and you could see that this was a spring and that we come back all the way to the top of the trading range and then eventually break out. Or what we could see is if we go back and redo all the way to the distributional range we've just been looking at, is that on the larger time frame, this becomes a reaccumulation after decline, similar to what we had seen with Bitcoin, so that it drops back down, maybe comes all the way down to $28, does something like this, has another reaccumulation range, and then goes up. But I want to, again, do one more thing here, which is just notice the scale and nature of all of this. The reason why we're in a position to begin with is because of this. There's a long-term accumulation range that has taken place here, and like most SOSs, we have a backup right to the top of the trading range. So again, just for educational purposes here, because that's what we're trying to do, both learn and educate, because I'm always learning. Here's reaccumulation, or accumulation schematic number 4. This is the falling wedge schematic. And if you'll notice here, right around the top of the range, you have a really strong and also volatile movement right into the backup, which is exactly what this could be. You could find out very quickly that this is just a trading range at the back of the backup. So in these areas, the first accumulation inside of the box is almost a dead giveaway of how to make the trade. It's very simple. As we go higher, the trade becomes more volatile, more supply starts coming in because there's profits to be taken, and we look up for these backup phases. So it's highly likely that Avalanche is in a backup phase, but that backup phase could come all the way down to $29, build a trading range below, and then go higher. It could also build a trading range just directly across here. It's too early to tell. But I learned something very valuable, because I think this schematic felt like a pretty obvious giveaway. I was on my break. I'd been closed out of my position anyways. There wasn't much else I could do, but this rejection here that we got for the first time did something also very important. For those of you that are learning this stuff, the trading range is important, but even more important is learning the supply signatures down at the bottom. Notice this big supply signature that came in for Avalanche. This is hugely important, because it's teaching us something about the primary support back here. So notice the primary support had a lot of liquidity. Look at this big wick, and look how we filled this big wick almost all the way back down to here, where we see this primary signature identical to this one. So we're often looking for signatures that meet this, that meet the criteria of the first primary support and the usually the buying climax of some kind here. And we just hit that now. So, at the larger frame, we could still be in an accumulation. And this is one of the most difficult things about understanding scale and variance, is that the fractal nature of something in any format is very difficult to understand. So I've kind of shared some of this stuff before, but I'm going to share it in our private group really quickly. If you have never looked at Benoit Mandelbrot's fractal sets, it's hyper valuable because the markets are very similar. The market is based off of human nature, and because of that, you have this type of experience. So I'm just going to quickly share from our private group. This is one of my favorites. This is, I think, the perfect way to look at scale and variance is that as you get closer into something, you see that it's a repetitive function, that a trading range is within a trading range is within a trading range. And as you zoom out, you find bigger and bigger ranges. The bigger the range, the more reliable the value of that range effectively, which is why this can feel so confusing. Why it can feel so difficult is to remember that the range we're actually watching is out here on the 2-day for the reaccumulation schematic number 4, where we have a long-term, multiple 100-day schematic going into the accumulation, but that when we get to the top of the box, we're expecting volatility here into the trading range anyways. So this isn't anything out of the ordinary. This is exactly what we are looking for. We're looking for volatility at the top of the range. But it can become confusing when you start to look at the lower time frames, and then you start to zoom in even more and then realize, okay, wait, so we had, let's go to here, check this out. I'll show you as an example. So the other day in the private group, I pointed this out just really briefly. I was like, oh, look, the first reaccumulation range we've seen on the 5-minute, which was true. This is the first reaccumulation range we've seen on the 5-minute going all the way back. This is all distribution, 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 and then boom, ooh, a little reaccumulation on the 5-minute. But if you forget where you are on the 2-day, you don't know what's going to come next, because as soon as we got up here, and as another moment in time came to pass, it actually became quite obvious that this was another smaller distribution. Take a look at this now, right? Here we see a boom, break up into the top of the box, the inability to close back into the top of the range, a test of the middle of the range, the inability to hold the top of the trading range, and then a breakdown. So here was a distribution schematic right after a 5-minute reaccumulation schematic inside of a distributional schematic on the 2-hour, at the top of the box on the 2-day. So understanding the nature of this kind of fractal that I've shared here is so important, because as valuable as trading ranges can be, they can also be extraordinarily divisive when you don't know where you are inside the range. Now I know you'd be like, well, Tio, clearly technical analysis doesn't work. And if you're looking at the smaller time frames, you're right, it doesn't really work. It can actually go either direction really quickly, and the amount of time you should spend in a trade is usually based off the trading range that you've made the assumption off of. So for instance, if we're down here on the where'd we go with our... Yeah, if we're down here on the 2-hour, you should be in a trade really that's only within a few hours. This looks distributional to me, but again, when we were down here on the 15-minute or the 5-minute here, we're here on a trade on the 5-minute. Like, you don't want to be in that trade for too long, because the reliability of this little tiny reaccumulation schematic that clearly took place here. I mean, and again, for those of you that are studying, you'll recognize it right away. Our buying climax or jump across the creek, our SOS and our backup phase. Oh, and look, boom, boom, up. But within a very short period of time, the entirety of this reaccumulation schematic on the 5-minute was wiped out, totally destroyed, because there was an even larger distributional schematic here. We're into distribution again, and I suspect that what we're seeing now is the finality of this 2-hour range, which looks like it's going to be distributional too. But knowing that we're at the top of the range, all that this might do is come down to 28, back up to 32, down to 30, back up to 20, 35, and then go higher again. Because remembering that we are at the back of a 2-day trade, which has had 500 days of accumulation into it, this is not done being bullish yet. We are still very, very bullish on the larger time frames. The market makers don't spend 600 days building a position just to get out of it. Now you could say, well, Tio, is this maybe just a break above the box that ends up being distributional? And you could say maybe, but this reaccumulation schematic here of this falling wedge looked like I was trying to draw something else there maybe here. This falling dong. Anyways, the point of this being, it's early in the morning, and I'm trying to share this idea as easily as possible. And it's not. Fractal mathematics is not an easy thing. But we're right in the backup phase. This is exactly where we're supposed to be. Nothing has changed for Avalanche. We're still ultimately bullish. I think we're going to see new upside potential, but we're in an area now that's volatile. The US dollar, let's go back to the US dollar and the S&P 500. The S&P 500 also looks like it's in a temporary distributional range on the smaller time frames. The dollar looks like it's about to do finish part of its upside before it turns into further distribution, which will likely coincide with the up of the rest of the market. So ultimately, again, on the longer time frame, bullish. Smaller time frames, bearish. These will change though to match the larger time frame eventually. And then what you'll probably see is this beautiful little backup range here for Avalanche before it goes higher. So hopefully that was helpful. I'm sorry I took the whole 2 weeks off. I wasn't feeling very good. I'm going through some personal, emotional stuff. Life is difficult. Maybe I'll make some videos about my more day-to-day life. I just bought Starlink and I'm going to set that up. I'm going to start building the new house soon beside the pool. So maybe I'll make some videos about that. Let's now take a look at some of your guys' thoughts and questions. So I'll roll over here to the Google chat. And then I will take a look at some of your guys' thoughts here. No, I forgot this is not an iPad now. This is just this pop-up chat. There we go. Okay, let's take a look at what y'all are asking, and we'll give me the full screen here. So if you guys want to, and let's actually check to make sure the private den didn't ask any questions, because I told you guys I would go over your questions there first. Awesome, not a ton of questions there, so I'll just go with the group chat here. Let's see, here we go. I'm just reading through some of your guys' thoughts and questions here, so give me a second. I'll scroll back. So many now know this information. It causes to be front run. Yeah, Hazmat, that's not usually the case, because you're dealing with something that's human emotion. And no matter how many people know that these types of targets and ideas exist, human emotion is incredibly difficult for the average participant to remove themselves from. Fear and greed are deep, deep, ancient triggers of almost sociopathic and psychopathic behaviors within each of our individual human psyches. You know, the idea that we can each be tyrannical dictators or something given the proper circumstances is clear. So it's very difficult to remove human emotion, which is really the driver of these trading ranges. So even though the charting has not changed over 100 years, neither is human emotion, and human emotion is not going to change. And most of the people who are drawn to that, this is why you'll see YouTube channels that are constantly switching. Oh my God, Bitcoin's going up, Bitcoin's going down. Where are we in the market? It's bearish, it's bullish. Is it on? Is it off? We're bullish. But these smaller time frames will drive the greed and fear of individual participants, where it just basically sounds like noise. So you can't outpace human notion. So these trading ranges will continue to work for a very, very long time. Let's see. Veteran of the moves, no sweat. Let's get it. Not afraid anymore. I love this. Last bull run, this would have ruined my day, but now I've grown up. I love this. Great to hear you guys are doing well. Oh my God, I woke up to no more coffee. I'm so glad I had coffee today. Bear's voice is soothing. Oh, thank you. My music is smoother. I'll play some music at the end of this for y'all. But Bear, BitBoy said we were going to the moon. Oh, you mean Ben Armstrong? When we dippity dip, I buy the dip, we dip, something like this. Yes. This is just going to make BTC stronger, pushing out the weak hands and leverage. Yep, I agree. And this is just a backup phase for Avalanche, it looks like too. So yeah, little do they know, people don't know that when you increase the minimum wage, all you do is make the cost of everything higher. It's one of the dumbest things I've ever seen. People are so uneducated about the larger markets and finance. It's impressive. I should have done mushrooms while watching that GIF. Jay Crypto says, Tio is the best, always gives best advice, though I miss those 2017 emergency BTC pump videos. Yeah, I'm not as moved emotionally by the markets, but those were fun. Oh my God, Bitcoin's moving at all within the range, like quick emergency videos. Now I waited. Although today I did want to catch out that drop just because I happened to be awake and the cameras were all turned on and I was intending to do a video for everyone anyways today. I figured, hey, let's do it right now in the morning while the coffee is still hot. People are not scared yet. No, I think we're gonna have we're gonna have more volatility come into the markets. How much was the Starlink? I think it was about $400. Still living out in the jungle, yes. BTC ETF saga. Part of it doesn't feel good. Like hearing the name BlackRock is buying Bitcoin feels kind of dirty. Like these are the technical enemies of a freedom financial system. I don't know why everyone gets so excited about it. Even Michael Saylor sounds like a fucking trashy Flachschmauber, because it's the original intent behind why I was sold on Bitcoin was, hey, this is a free choice peer-to-peer money. We can kind of decide its value because we're the participants within the ecosystem. But as you get these bigger participants showing up, they become the controllers of the vast majority of the supply. And then it starts to change the narrative. Now it's like a Saylor narrative for Bitcoin because they hold such a massive chunk of the supply. Their ability to control the market to the downside is huge. It's huge. It's ridiculous. Let's see. Yes, we all agree in the long term Bitcoin is going higher. No questions in the private group because we talk about a lot of stuff. Hold on. Ava Bear says, we talk about all the stuff all the time, so all of our questions have been answered. Thanks, Ava. I love that. Thank you for your deep intel and perspectives. Oh, I appreciate all your guys' support today. Wish the bear would do a sleep video, like a hibernation video. Or do you want me to just post like an outside video of how beautiful the... Here, hold on a sec. Let me just, I wonder if I probably can't zoom very well. Because I've got so much gear. Oh yeah, I'm not going to be able to zoom at all. There's outside. It's a beautiful sunny day, but right next to all the camera gear. Okay, well, I guess that was all for your guys' thoughts and questions. Maybe what I'll do is I will take a look at just a few more small things on the market and the charts before we dive off for today. Because I know there's a lot of people that are asking a lot of questions. Let's take some moments to go back to our market screen share, and let's just take a look at what else is going on in the general markets. So it might give us a bit more data and a bit more clues. Let's take a look at Solana, for instance. So first off, again, in the private group, this was such a I love these trading ranges. Reaccumulation schematics 1 and 2 to me are just so amazing. They're so reliable. I almost want to delete schematic 3 just because it's such a pain in the ass. But schematics 1 and 2 are so beautiful. This is schematic 2. This is effectively exactly what we saw for Solana. This was really beautiful. Again, I think the entry of the positions between the spring and the test and the jump across the creek is so important, with a very hard stop loss basically right at the back of the jump of the creek. Because as soon as you come back into the trading range here, the increased volatility risk becomes way too high for this to end up being maybe a phase C where the breakdown takes place totally. But again, what we saw with Solana was a massive move to the upside from the middle of the range, almost 100 and something percent to where we are now. So again, let's take a look. Again, this is a really interesting spot here. Knowing that we're at the backup phase for Avalanche and effectively what we've seen, this could very easily just be a spring of a larger reaccumulation schematic. And this is this is why this stuff can be so deceiving on the reaccumulation versus the 500 or 600 day accumulation cycles, is that it's just not as easy to tell. It's really not as easy to discern the difference unless you get hyper good at recognizing volume and supply signatures. This could be just a spring, effectively, for Solana and Avalanche. But until we get further confirmations, there's no sense in opening positions here. It's better to just be patient because the market's going to give us definitive answers. And a lot of that answer, I think, is currently showing itself within the S&P 500. I think the fact that the S&P 500 is showing this somewhat distribution schematic here on the 15-minute leads me to believe that we're going to come down and test around 460 points for the S&P 500, doing something like this. And I think that Bitcoin will effectively follow, maybe bring us down to that $36,000 range and really trying to fulfill the prophecy of this idea that we had drawn out previously, which is this trading range that takes place between 49 and 36,000. It's going to define that now, I believe. I think Bitcoin's going to define that now. And it could very quickly run up to $49,000 just to confuse everybody and then come back down to $36,000. This is going to be a very volatile range. So just keep that in mind. Actually, a few of our clients who are trying to buy larger sums of Bitcoin, we told them just to be patient and effectively execute a dollar cost averaging strategy throughout the next 6 months because of the volatility that's expected in this range is going to be there to drive that emotionality of each of the participants for where they're entering and exiting and moving around between trades at a very high-paced manner and effectively just feeding all of that extra loss to the market maker himself. So anyways, we're going to leave it with that. Thank you guys for all the kind, wonderful support. Maybe if you like these morning live streams, maybe I'll try to do them twice a week instead of the longer videos. I'm not sure. We'll figure it out. But I'll try to find, now that the New Year's here and all of my New Year's paperwork is done and all the bills have been paid, I've got a lot more free time. But this next little bit will be volatile. So just keep that in mind as you're looking to reallocate your profits from this last run, or just the positions you're already in if you want to continue to increase them. Note that the volatility will be high enough to just be patient for the downsides to come in. But again, overall, this is a much bigger bullish sentiment that we're looking at here. Again, compare in my estimate where we were in 2020 through the end of 2020 from where we are now in 2022 to the end of 2023, that I think we're about to get a massive bull market in Bitcoin and many of the other assets. But the volatility that comes in here now is a hyper important part. So actually, just one more time, sorry. Yeah, look at these two. I think that where we were in this red widening megaphone is basically where we are in this red widening megaphone, that we're effectively right here. So keep that in mind. Scales within scales, and that the whole universe is built off stuff that looks like this. So this type of thought, like, oh look, here are these repeating patterns. This is why, because the entire universe is built off this kind of stuff. Anyways, this is Tio with the Arcane Bear. Thank you guys all for joining us today. I had a lot of fun with this one. Sorry I didn't get a bit more of the private email updates out about that distribution schematic as it was coming in. But all the new distribution schematics are on the website. So if you are a private Arcane Bear member, they can all be found here for the two distributional schematics we added this last 2 weeks. And then we've got about 4 more of these coming too. So keeping that education marker high. Thanks all for joining. We'll see you guys on the next episode.